Hi there. Well, the other day we learned how to do a schedule of changes in working capital. As you see on the screen, I have it to refresh your memory. What I'm going to show you today is how to do a worksheet for analyzing change. As you can see, I've already put the 3-line heading in there. The name of the company, the name of the financial statement, worksheet for analyzing changes in financial position, as well as the time frame or the fiscal period for the year ended 1981-12/31. Yes, I know, we're a little outdated. That's okay though. Alright, so what we're going to do is I need you to make sure that you have a textbook and that you're looking at page 541 for the Goforth Corporation. And I'm going to go through and do the where it says additional data needed. I'm going to end up making those 7 entries with you. But first of all, we need to get our balance sheet accounts entered into our statement of our worksheet for analyzing changes in financial position. So I'm going to go ahead and do that. And you could probably look on page 533. So have a look at page 533 on the bottom, and that will give you the balance sheet accounts that I'm going to type in, and you could go ahead and type that in while you're waiting for me. I'll be right back. Alright, so as you can see, I've typed in the balance sheet accounts and I've entered the debits as well as the credits. Okay, I'm going to put in the beginning balance sheet, beginning account balance, I'm going to put the balance from the end of 1980. Okay, and you will find those balances on page 542 in the textbook, except for working capital, which you will find on the schedule of changes. Okay, so our working capital at the beginning of 1981 is $208,000, which you can see is at the end of 1980. Okay, so I'm going to go ahead and put that in. And plant and equipment is the same as fixed assets. Okay, so if you look on page 542, fixed assets is $192,000. Okay, those are the only 2 debits. So we're going to add those up. And you should end up with 400,000. Okay, because that's all we have there, we're going to double rule that. Okay, and then we're going to put in our credits. So our accumulated depreciation is 80,000. Our mortgage payable is 112,000. Capital stock is 192,000, and retained earnings is 16,000. And once again, we're going to add those up. And they should equal our debits. If they don't, then we have to go back and see what we did wrong. Whoosh, aren't we lucky they worked? Alright, so we have that ready. So now we are ready to enter in our changes. Okay, so the first change that we have is going to be, oh, actually, before we do that, we're going to go down, we're going to type in our changes in working capital. So I'm just going to do that. Changes in working capital. And we're going to center that. And we have two types of changes. We have sources of working capital, which is how we're going to get our money. Okay, so ways that we can get money. And the other is uses of working capital. So what are we doing with that money? Okay, so our first change that we have is that number A on page 541 tells us that net income for the year was $16,000. Okay, so net income is a source of working capital. So net income for the year is $16,000, and we're going to put that in column C to show that that is one of our changes. Okay, because we have a debit down on the changes in working capital part, we have to have a credit on the top half. Okay, and that credit is going to go under retained earnings. Okay, I'm going to color those ones red just so that you know that those two went together, and that was A. Hopefully that makes sense. Number B, depreciation on fixed assets for the year. Okay, so once again, that's a source. I know it doesn't make much sense, but it is. So depreciation expense for the year, and all of the sources are going to be a debit on the bottom half. Happens to be the same amount, 16,000. So I'm going to color this one blue, turquoise. And the credit on the top half is going to go with accumulated depreciation, 16,000. Okay, so I'm going to make sure that that's turquoise. Okay, just a reminder, you're always going to have things. If you have it on the debit on the changes in working capital part, it's going to be on the credit on the top. If you have it on the credit side, then it's going to be on the debit side on the top. Fixed assets were bought for $24,000 is number C. Okay, that's a use of working capital. That's how we're using our money. So we bought new equipment. Okay, so as I said, the uses are going to be credits. So we spent $24,000 on new equipment. And let's see what color we're going to make that one. We're going to make that one orange. Maybe not orange. Green. Okay, when we look up top, we've got more plant and equipment or fixed assets. So we're going to put $24,000 up there. And we're going to make that the same color, green. D, cash received from addition to mortgage payable. Okay, so we're getting more money. So that's going to be a source of our working capital. Okay, so we're going to call that borrowed on mortgage payable. And the amount that we borrowed is going to be a debit on our changes in working capital part, $32,000. Okay, and we're going to make that one navy blue. And we have an addition to our mortgage payable, so we're going to put that on the credit side. Okay, so there's our change. Number E shows that we paid on our mortgage $16,000. So that's going to be a use. And so we're going to put in here paid on mortgage payable. Okay, and remember the uses are credits, so 16,000. And I think we're going to make that one pink. Okay, so if we owe less, we're going to put that $16,000 under mortgage payable on the debit side, and once again we're going to make that pink. Hopefully I'm not going too quickly for you. Dividends declared and paid, $12,800. So that's money that we are using again. So we're going to paid dividends. And we're paying $12,800. I think we're just going to leave those black. And that's going to go under retained earnings. I'm going to bold those just so that you can see them a little more clearly. And the last one is you issued capital stock. Okay, so we're getting more money because we've issued more stock to our shareholders, so that we're going to put that under a source of working capital. So we issued capital stock. So we're getting more people to invest in our company. And we did $32,000 there. Okay, and I think we'll color this one purple. Okay, and that additional capital stock is going to go under capital stock. There, we've now analyzed the changes. What we need to do now is add up our bottom changes in working capital. So we're going to add these up. And we're only adding up our changes. So when we do our sum, I'm only going from C27 to the end. Okay, and when I'm doing this column, I'm doing the same ones. I'm starting at C27 and going until the end. Okay, as you notice, they don't equal. They need to equal. And the difference is going to be our increase in working capital. Okay, and you can get that working capital from our schedule of changes in working capital. So if I flip back here, our increase in working capital in 1981 is $43,200. So I'm going to put $43,200 there. And I need to find another color for you. How about brown? Okay, that increase in working capital is going to go up at the top here where it says increase in working capital. Okay, 43,200. Oops, there we go. All right, so we should be able to re-add these bottom ones now, and they should equal. So let's just do a double check. And I'm going to drag it across rather than type the formula in again. And isn't that great when things equal like they're supposed to? Hope you enjoyed your Monopoly game. All right, so the last thing we need to do is we need to do some totals here. We need to add up columns C and D up here as well. And I can't just drag it across because we need to add up all of this. And it should equal 96,000. So I can drag this one across. And we're going to single and double rule. Okay, so these numbers here have to equal the numbers down at the bottom in the analysis part. Okay, we need to now calculate our ending balances. So, as before, if we have a debit and we make a debit entry, we add. And if we have a credit on that same line, we would subtract. So to make things easy, we're going to do equals. We're going to add the first one. Then we're going to add the debit. And just in case we ever have anything, we're going to subtract the credit. Okay, so I'm going to drag that down. So once again, we're going to equal sign, we're going to add the debit, then we're going to subtract the credit if we have one, and press enter. Okay, then we need to add these two numbers up, and double rule. Okay, so now we're looking at a credit. So we have a beginning balance of a credit. Okay, if we had a debit, we would subtract. So I'm going to minus the debit, and I'm going to add the credit. Okay, so I take the credit, I subtract the debit amount, and add the credit amount. Okay, one more time. I'm going to add the credit, subtract the debit, and add the credit. Do I have to do that for you one more time? Equals credit minus the debit plus the credit equals. When I add these credits up, they must equal that debit total that I got just above. 467,200 is correct. Of course, the last step that we always do is make things into currency. And we'll just do that really quickly. Oops, don't want a dollar sign. And click on OK. So there you have an example of the worksheet for analyzing changes in financial position. Okay, so I'm going to pause the video again, and then we're going to do the statement of changes in financial position, which you are going to get from the bottom half of this page. So I will be right back. Alright, we're back, and we're going to do the statement of changes. Okay, so once again, look at the heading. Notice that I have merged and centered the title across to C. I have the name of the company, Goforth Corporation. Then I have the statement of changes in financial position, which is the name of the document, and the fiscal period for the year ended 1981-12/31. So the first part that we're going to put in is the sources of working capital. Remember, we can get this from our worksheet for analyzing change. So our first source of working capital was our net income. And our net income was $16,000. Then we're going to add expenses not using working capital. And that expense would be our depreciation expense, okay? Because there really is no money involved when we're dealing with depreciation expense. Okay, so once we add that, that is going to give us our working capital. Oops, I'm not typing very well tonight. Working capital provided by operations. So we're going to add those two. And then we're going to list our other sources of working capital. So we had borrowed on mortgage payable, which was $32,000. And we had issued capital stock, which was $32,000. So our total sources of working capital is going to be those three numbers added up, which should equal 96,000. Okay, then we're going to have our uses of working capital. That shouldn't have indented. There we go. Okay, so our uses were that we bought new equipment, and that was worth $24,000. We paid on mortgage payable $16,000, and we paid that cash dividend, or we paid dividends of $12,800. So our total uses of working capital is going to be $52,800. And the last thing we're going to have is our increase in working capital in 1981. Okay, and we're going to subtract those two numbers. So 96,000 minus 52,800 gives us our 43,200, which we've seen several times already. Okay, make sure you make everything into currency. And there you have your statements. Hopefully not too difficult to understand. Good luck.